Hello and welcome to financialexpress.com. I'm Shaleen Agrawal. Today we are talking about corporate taxation, digital tax with regard to upcoming Union Budget 2023. To discuss this, we have with us Mr. SR Patnaik, Head of Taxation at Cyril Amarchand Mangaldas. Mr. Patnaik, thank you and welcome.
Thank you. Thank you so much, Shaleen. It's nice to be here and happy to share my views about what is being proposed in the budget, the upcoming budget.
Sir, there has been some international momentum on moving towards a global minimum tax rate. Do you think India is ready for that kind of global minimum tax rate regime? And is such kind of move or a move towards that kind of move possible right now?
Sure. So I think, Celine, India is not only ready. In fact, India has already committed to be a part of that global regime. And, when the global minimum, tax of 15% was introduced, India has been one of the key players in that space. In fact, India has been quite ahead in terms of, the global development around it, because India was amongst the first countries to actually levy this equalization levy of 6%, which got introduced about 4 years back. Then we also expanded that to have a separate digital tax in relation to the transactions pertaining to the digital platform. On the top of it, we have also introduced the place of business, place of effective management, as well as economic significant presence, in the country, which also could result in additional taxes being levied on foreign companies who are doing business in India. So I think, India is almost, in sync with the global community in terms of developing this new regime. And in fact, all of these things that we just talked about, they have been introduced as a, intermediate, arrangement, so that once we have that global taxation regime in place, all of these will be phased out. And this is what the Indian government has also committed to some of the Western countries like the US, etc. So not only we are ready, we are in fact driving it. And India is in fact one of the pioneers in terms of, attracting global momentum towards having a proper, significant, taxation regime, which is unique and applicable to everybody.
India already has a 15% MAT. How is the global minimum tax rate different from that?
Yeah, so minimum alternate tax is a slightly different type of tax. It is not actually a standard tax rate by itself. It becomes applicable only when you have got a significant amount of book profits, but your effective tax rate is either lower or nil, in comparison to what you would have otherwise paid. So in that situation, minimum alternate tax is the amount of tax that you have to necessarily pay. But that's not like, final tax liability. You can subsequently adjust it, and you may actually, claim credit of minimum alternate tax paid in 1 year and then subsequently adjust it. So that's not a real tax outgo. What the global minimum tax of 15% is talking about is that, as an entity, you have to pay at least 15% tax on your profits all over the world. Right? So, for example, say there is a company, there is a subsidiary of Google in Ireland. Now, that entity by itself pays a 2% or 3% tax effectively. Now, that is not something that will be acceptable now, because in terms of the overall profits of Google will have to pay 15% tax. Now, so that's the minimum threshold that, almost all the major countries have agreed on. And once that is done, then there would be a separate kind of, type of, adjustment that will be done, so that all countries, depending on how much of revenue that do they contribute to the Google's global revenue, they will have to share that portion of, their portion of that pie. So which is the allocation of the profit amount amongst the various, countries who are getting, benefited out of it.
Very recently, India undertook a significant corporate tax rejig, in which the tax rate was cut to 25%, and there were several other incentives announced. This was just just slightly before COVID. Do you think there is any appetite for the upcoming budget to do anything significantly meaningful on the corporate taxation front?
I think you're right that there has been quite a bit of rationalization of the taxation regime in India. So while the overall corporate tax rate of 25%, which is quite comparable, even though the skeptics would argue that look, if there is a tax rate of somewhere around 15% in Singapore, then there are other countries like the UK who are promoting a tax rate of somewhere around 20-21%. Then how can you say India's 25% is fair in that perspective? But keeping that aside, I think what is critical is, in spite of whatever has been proposed so far, the uh, capital investment by the private sector hasn't really risen up to their mark, right? If you look at the entire economic development that is happening, so far it has been prompted primarily by the government in terms of infrastructure development and ports and roads and airports and seaports, etc. But in order to push the private side also to contribute equally, if not more, I think there is some amount of leverage that needs to be extended to them. And in that context, I believe that rather than talking about a significant amount of tax in incentive, in the form of lower tax, they might consider providing some kind of a production linked, rather not production linked, but rather investment related incentives. Like, for example, you can provide some type of accelerated depreciation, because that has been introduced a few years back, and that actually provided a significant amount of impetus to the private sector to enhance their level of capital investment. So Indian government could possibly think about some of this. And along with that, because we are considering also a huge amount of unemployment in the country, we might also see some specific incentives being provided in the realm of what is currently provided under 80JJAA of the Income Tax Act, which basically provides incentive up to 30% of the amount of wage bill that you are incurring for new employees. So I think on one hand you are enhancing the capital investment, on the other hand you are actually providing incentive to industries who are providing additional amount of employment generation. I think some of these steps might be extremely useful.
Do you expect any of that to happen in the upcoming budget?
Well, I can't really commit anything, but I would hope that because everybody recognizes this, that the private sector investment has not been up to the mark. So in order to further incentivize private sector investment, something in the line of accelerated depreciation would be one specific object. And we always have this perennial issue of unemployment. So some additional incentive to people who are generating further employment opportunities is something that is definitely for the government to consider. And I would hope that they do take this into account when they are framing their policies for the coming year.
Let's talk about Gift City for a bit. Um,
Sure.
how has been India's experience with Gift City so far?
So Gift City has been like, it's a, we are getting some significant, developments there. There are quite a few incentives that have been extended to people who are planning to operate out of the Gift City. And we believe that, the government is in the right direction, but somehow, it is still lacking that competitive edge. And, also being able to attract more and more people to come and stay there at the gift city. I think most of the developments that we see based on our interactions with clients, everyone wants to have a presence there. Everybody wants to get that benefit, but they are not sure whether they can actually ask their employees to go there and stay there. I think, and that was the objective. As far as the developments of the gift city is concerned, there is a significant amount of infrastructure related developments that have taken place. Lots of constructions are going on, but it is not yet been a place where people would be encouraged to go and stay there and start, operating out of there without having to come back to the main city or without having to drive out of gift city.
Sure.
Now,
For an Indian company uh, wanting to, or an Indian entity wanting to avail of those kind of tax benefits, what makes more sense, to move to gift city, or to set up an office or entity in, let's say, Singapore or any other tax friendly geography?
see, I think that's a probably slightly longish kind of a response, and also it may not really meet the requirements, because if you are an Indian entity and you have got all your clients in India and you actually make money out of providing goods or services to Indian customers, then it is difficult, because even then, even if you are in the gift city, you are not really getting any significant amount of benefits, right? Because the benefit is available only when it is outward, which is like, you are engaged in the business of exporting goods or services. Only then it makes sense for you to consider gift city as an avenue, as an opportunity for you to expand your operations and try to operate out of gift city.
Mm.
But if everything that you are generating, every revenue that you are getting out of your customers is from Indian customers, then you don't really have any significant amount of advantage, and therefore you may not really want to go to gift city, because that itself is a process in itself. That itself will involve a significant amount of logistical support and additional transaction related costs. You will have to hire new place, new building. You have to hire people, etc. So that doesn't make sense. But if you are providing services or goods to customers situated outside India, then gift city becomes the place through which you can start operating. In that situation, you might be able to take advantage of the tax incentives that are being provided. On the top of it, you would also be in the newest hub, so to speak, from where the new types of services and goods are being provided, just like what happened earlier with export-oriented units, which subsequently got become a part of the special economic zones, and now the special economic zone related benefits are getting phased out, and that's where this gift city is coming in.
What are the expectations from the budget to do something for the gift city? What can the budget do? What can the government do in the budget?
I think, as I was talking about, we should be trying to provide a little bit more, incentive to people who can provide the gap which is currently existing, which is more from the perspective of social and not so much about the infra related points, but more about, like, that there should be more schools, there should be more colleges, there should be more entertainment avenues, there should be more to create a socio-cultural impact of that particular place, when it becomes like one of the happening places around that area, and therefore people would be encouraged to go there. Because right now what is happening is, you might have some people who are staying there because they're anyways residents of Ahmedabad or some other place close by, and they don't mind going there. But even they would not be willing, and they are not probably willing to sacrifice their family life and go and stay there. Now, if we can do something about it and try to help all those additional people who are required to be there and who are required to perform their services, if they can also become a part of this program, and they could be provided certain specific types of incentives, so that they are encouraged to set up their shops, set up their parks, set up their tea joints, coffee joints, whatever you want to call, entertainment avenues, movies, theaters, cinemas. All of this will probably help them to attract more and more people, and then it would be better for everybody concerned, because they would have their own business and they would also get some amount of incentives. The other people would have additional things to do once they're out of office, and they don't really need to worry about their day-to-day work and what is going to happen the next day.
Of course, make it like a regular town with all the
Absolutely.
amenities and facilities.
Yeah.
What is the future of taxation in terms of being faceless, going faceless, or more using more automation?
I think in terms of future, it is going to be further automated. That's for sure. And the government has already taken some very specific steps in this regard. And I don't think there is going to be any way back from there. So we are looking at, or we are going to have much more vigorous faceless assessment, faceless appeal proceedings. In fact, there are also plans to make even the tribunal, which is the second level of appellate forum, they are planning to make that equivalent of faceless, exercise. So I think that is the way forward for sure. But
I'll add a point to that.
yeah,
What is it that the government can do legislation-wise in the budget
yeah.
to make things more faceless and more automated? Is there anything that the government do in terms of legislation in the budget?
Yeah, I think there have been some significant amount of challenges and issues that have come out in terms of the plan that has already been presented, and in terms of how the assessments have taken place over the last 2-3 years. One of the biggest issues is in terms of the assessing officers do not give adequate opportunity to the taxpayer, and they ask a huge number of questions only at the last moment, and thereafter they don't get the time to respond to that. And the officers are also extremely stringent in terms of allowing additional time, and they go ahead and pass their orders based on their, according to the taxpayers, in their whims and fancies. Now, some of that has been kind of highlighted before the courts, and the courts have taken a very harsh view of it, because the law in its original character had envisioned that wherever taxpayer wants a personal opportunity to be heard, they should be granted that, irrespective. But that is being construed differently by the authorities, and therefore we had seen a number of instances where the taxpayers did not get the opportunity to come and represent. So
Sure.
that is something that should be, probably even very categorically legislated, so that the authorities do not have that option of not providing an opportunity, especially when the taxpayer wants it. Uh, in addition to that, I think there could be some amount of regularization stroke legislation in terms of how much time that you should give to the taxpayer, so that there is no last minute hurdle, and there is no last minute uh, kind of exchange of words stroke views between the taxpayer and the tax administrator, that I asked 2 months, why did you give me only 1 month? And or the other way around, it would be that you asked for 7 days, I gave you 15 days, and in spite of that you are not coming and providing those details and documents. I think that is something, if it can be legislated, then it would kind of remove all types of ambiguities vis-a-vis the taxpayer and the tax administrator, and we can hope for a more kind of well regarded and well respected taxation regime, which is fair to both the tax administrator as well as the taxpayer.
Mr. Patnaik, we'll leave it here for today. and probably we'll pick it after the budget, and let's see what does get announced in the budget. Hopefully, some
Sure.
of these points.
Sure. Thank you
Thank you
so
so
much.
much for joining us today.
Thank you. Thank you so much for having me.